Well, good afternoon, everyone. Scott Henderson, shooter. We're going to go over some charts, see if we can try and figure out what's going on in this market here. And of course, at the end of our presentation, please do review our disclosures. Well, let's start with the dollar. We still have not gone anywhere. And to be very candid, I have been trying to justify why we're sort of pegged in this range and equities are still rallying because it's counterintuitive for me. Because we really need to be below 95 to really give us steam that we're seeing now. And actually, earlier today, I was working on really where all this, I'm going to call it an alternate QE coming in. Now, basically, I really hadn't, prior to working on this particular article, really broken down where all of this funding was coming in from all these different bills. Well, through the process here, there's approximately $4 trillion that's starting to trickle into the market from appropriation bills, et cetera, that are sponsoring different aspects of sectors, aka space or telecom, even rare earth minerals, etc. But that total figure comes in about $4 trillion. And ultimately, through this research, basically I've identified, I think about 5 to 10%, maybe max 15% of that capital is actually coming to the market. So I look at the way the dollar is right now as stable. So I'm not looking at it as a headwind or a tailwind, because quite often liquidity can sort of squash the effects of the dollar. So my bias here is the dollar is in a neutral state for equity. With that, let me jump over to equities. And by the way, I don't see that changing dramatically. So coming in and looking at, my trend extension right now that I see is 930. It's going to take an awful lot for that to reject. However, I will say this, we've got peaking drive 1, peaking drive 2, peaking drive 3. So this is an extension of the trend. Now, quite often, like I've mentioned time and time again, Elliott Wave likes 3, 5s, and 8s. So that would mean that we get a 4, something equal to the distance here. So maybe we get a 4 here, and then we get a 5 here. And that's probably the most likely future point for us to see a rejection, or we get an 8, which means we would exceed that 2618 and probably get somewhere around 1,000. So I see a substantial amount of upside. And I'm looking at this on where can I add, and we have this quagmire, God knows how many times I've said that this year, that we're in a position now where we have so much consolidation. I mean, the whales, in other words, the $1 million trades, are so few and far between, and they're all piling into the same names, and then they dump and they switch to another name. So the liquidity that's coming into specific names, and we saw this in Micron. So I posted it. I'm just going to drift off the S&P 500 for a second and drift over to Micron for a second, because a couple weeks back I had written an article about Micron to 2K by the end of the year. I wrote that when we were down about 600. I think we hit 970 something today. And the catalyst really isn't fully priced in, and I'm talking about that for a second. One reason I'm talking about all these bills is liquidity ultimately is the driver of this market, whether we like it or not. And whether we have a good setup or not is a whole nother scenario. And the problem, the quagmire that I see here, is I want to chase this. I'll use the term desperately. So I'm sitting on my hands more than I normally would. I'm focusing on a very specific box, and I'm pulling away. When I see a really solid setup, then I'm going to post those. Otherwise, I'm really in this mode where I need to see some kind of pullback. So let me talk about that article that I wrote just a little bit today, because we have a lot of people poorly positioned in this, we can call it a V-shaped recovery, an extension. And by now, there's a lot of heat coming down from the executive, from the VIP floor, and they're basically screaming at this point, get positioned. And we see it in how these traders are opening positions and then they're getting the hell out. The reason is because they have to show some profits at this point, because we've now had too long of a rally running. We've now run about, roughly about, or just shy of 110 points, from our last breakout here back at roughly 612. So the noise is becoming deafening for them to show a profit. So I would have liked to have seen, especially coming into this week after the holiday, where we saw this huge buying spree coming in on Monday or on Tuesday. And even though we did see a little bit of a buying spree, it didn't get the follow through that I really would have hoped we would have got to give me some more conviction to try and put on a little more longs with such skinny breath or slim breath. So my bias to the upside is not, technically speaking, we're kind of confirming, but we come off of a prior confirming high in this leg, this mound. So this was our confirming high. The challenging part about ones, when we get a confirming high, quite often they're taken out in three, because it sort of silently sneaks up on it and takes it out. And this potentially could do that the way this looks. So jumping over to the NASDAQ and taking a similar look at where my projections are, we now are exceeding this slope that I have here. So that, the reality is we could be up at 1250 February of 28, maybe. I mean, if this trend is going to continue, earliest would be March of 27. So that window is really getting steep. Like we're almost in a parabolic kind of moved phase where expansion could be very aggressive here. And that is extremely challenging for a position trader, especially with how few of the names, even though a lot of names are running, they're very specific. And yet, at the same time, when they all come off, the whole sector comes off, you can tell that this is institutional rotation, like, for example, Photonic. Initially, when we first picked it out, it was a great run for a couple of weeks. Now they're exiting, they're selling off. Now, let me jump into space just for a second, because the problem that we have on the 12th, and realize we have opt-ex expiration on the 12th and the 18th, and supposedly SpaceX, even though it's not public, or at least I don't remember seeing it today, I didn't see it yesterday when I checked, is supposed to have their public offering on the 12th. Now, what a lot of people aren't thinking about is 8% of the stock is going to be available to retail investors, and they've skinnied down the holding period for the remainder of the holders, the primary investors. So ultimately, there's going to be a liquidity crunch. And what the institutions are going to have to do to fund those shares is they're going to have to sell something. And they're going to have to sell something equal, I'm guessing, somewhere between 500, 600, maybe even as much as 800 billion to raise that additional liquidity to just buy Tesla. Now, on top of that, we have Anthropic as well as OpenAI, which is supposed to hit about the same time. We're just talking about, just a massive potential quad witching period with the rotation that we're going to see into that. And it's going to be really hard to hold some names. So the map that I'm thinking, the reason I'm talking about this at the NASDAQ is I'm thinking that we're going to get a pump, sort of some sympathy trades where everybody's trying to catch all these alternate names, like Rocket Labs or AST Space Mobile, etc. But at the same time, as we go into the public offering, they are also likely candidates to be sold. So my assumption is we get a dip and then a second pop off of that, which may or may not be at a better price. So the one thing that I'm going to definitely suggest is that you really map out your risk map on what you want to risk going into space, because at the end of this, or the last part of this meeting today, I'm going to go through some space names, some names that look good. Because I think it's well timed with the 12th coming up around the corner, so we can start thinking about how we want to get positioned. Now, I have not entered TLT yet, and the only reason I haven't is because I just have not seen the flow in calls. I just don't see the number there. So we really haven't taken out this trend resistance I see here, this little line. Let me just put a line there so you physically can see it. So it's above my 84 where I said I was going to enter, and I just haven't seen the flow. Nothing is showing up any of my radars where anybody's buying this aggressively. So my first response is, why should I? Kind of thing. That's sort of how my mind thinks. If it doesn't have flow, I don't really get a huge amount of interest in this market. So let me jump over. I want to look at silver for a second, because I think silver is going to continue its leg lower. I want to point this out. Even though it's showing a 5, this to me could just as easily be an impulse down. And I've talked about that before. So now we've got a more aggressive, maybe like a broadening formation. I think shallow would be to test the shelf. That's the most likely place, back to 63. But realize that's going to be a buying opportunity if we get that. So I would suggest that you flag silver around 63 to 65, maybe as a way to add some metals at that point. because the scarcity for silver is going to come in probably by the end of this year, and at least I think the latest time frame, first or second quarter 2027 or 2027. All right, let's take a look at Bitcoin. I think we're going to continue this leg lower. I think we had significant rejection right here at this band. I think we come back and test these lows. Now, whether or not it takes that out and this 56K holds is yet to be seen. There is something going on with the liquidity in Bitcoin. Either, and this is something that has been suggested, is that either the Fed is trying to push it lower to buy it, which is very possible, or the liquidity is moved out of crypto and into the indexes simply because of how liquid and how profitable it's been. Well, Bitcoin has basically been flat, which, is typically a FOMO reaction in the market. So you start seeing this migration or rotation out of one asset class to another one. A common thing that in history has been bonds or stocks. There are even trading strategies around that, where you hold bonds for a certain period under these conditions, then you sell the bonds and buy equities. Same thing with Bitcoin. So there's no reason why that shouldn't occur. So hopefully we get back to around 55 and I get a chance to put a piece back on there. However, above 82K, I'm wrong. All right, let's jump over to some names and just go through. Now, we pulled out of our Micron this morning. We bought back our cash secured puts. I wanted to buy something back, but with how much volatility we saw right at the open, I wanted to see if I got a better price lower. So that might actually wait till Friday before I add something back, because I think it's way overdone, even with the numbers. That's just one hell of a move. It's a historic move. In fact, I don't recall a stock the size or as important to the infrastructure of the United States that has ever moved that much. And it's far exceeded that specific move, has even exceeded what the Bitcoin pumps were. So, Hood, we're still holding that. Nothing's changed. Ultimately, that and Link is my way of going into crypto here and get a piece on. Right now, it's not moving. So there again, there's a second reason why I'm not adding. SEI, again, still holding. Nothing's changed. Scenario is it gets bought out, jumps 10%. So don't expect that to go anywhere. Sentinel, hitting the little resistance right where we are. I still think it gets up and out. So, I'm just sitting there. Small enough position where I can hold it for 2 years if I need to, and there's no question with that. So that's sort of my thought. Just a quick peek at Link. Again, we're heading back up to that breakout. All right, let's look at some requests. I want to start off with JLBY. Nice spot, nice. I would have rather it been at 979 versus the overshoot, but it does look done to me here. The problem is it could be a dead cat bounce to about 15. So if you don't own it, the only way I would really think about entering is maybe we get a retrace. Why? I can't move that. I'm talking to myself because I'm trying to get something to move on my screen and it didn't move. All right, so maybe a pullback to around $10. I'd get interested in trying to add a piece there. But at this point, it's done nothing wrong. It depends on where your entry. If your entry was down here at 950, $10 even, hey, it's just a hold. DPRO, Dragonfly. I think this is, I'm going to put it in the category of the second wave of data centers. I think Dragonfly is one of those, but there's no reason I would say you can't build a position here because it is a great spot. Setup wise, the only thing I don't like is that we have a confirming low here and we didn't get a divergent low there. However, in wave one, that's not out of the ordinary because like over 60% of the time you get no confirmation on wave one. As far as the corrective leg, pretty much I'll classify this as an ABC. It's fairly equal. So again, I see no reason not to jump on board there. However, I don't think it's going to move yet. I think it'll be second, maybe third quarter next year, I think is the soonest timeline. All right, let's look at Bloom Energy. Now, I've revamped this based on my lower shelf fibs. So I'm looking at this where, let me bring up my labels, and I'm trying to teach AI how to read my charts. Now, ironic, it's fantastic that I've been able to do this. I actually have AI in my TradingView charts now, and even though it can't manipulate them, it can print them for me, which is going to be fabulous because I should be able to get to a live chart carousel kind of thing where any of our names we can pop up and then we can manage that, which is something that's just almost impossible with all the names that we want to watch for the setups to come in, simply because there's so many different cookies in the cookie jar at this point. But looking at Bloom Energy, I think we head towards this 2618. Now, assuming wave 3 is the longest wave, and I see no reason why it shouldn't be. Okay, it's not really a leading diagonal. It's a little broader, a little flatter, but we definitely have some euphoria here. It doesn't look like starts taking out the body of this at 275. I might think about taking some profits there. Otherwise, just let it run because it does look to me like we're in that phase where we do have peaking drive 1. We're going to put in peaking drive 2, which will probably be up around that 440. And then we get a decent back test. So maybe start trimming around 380 or somewhere in that range is the way that I would look at that. All right. LAC, we're now again, the timeline here with certain metals and certain supply chains are unknown. And there's really no way we can get a full understanding of the disruption that's coming from the Strait of Hormuz or how that is going to wash, especially in a chemically dependent industry like lithium. So I would assume that based on what we're seeing in price is we already have the players in the market who understand that and they've priced that in. So we're going to go back to that thesis is they fully priced in a stalling for a quarter or two or maybe more. So I would think that's reflective in the stocks. But again, this is a name that's done nothing wrong. The only thing I don't like is we kind of got a confirming low here on that low, but we've now since put in a lower high or a higher low. And as long as that doesn't get taken out, I mean, we should be fine building out a position back to the upside because that is like 75% chance that we at least take out this 683 and it's likely we go back to the 618. So again, that's something I would be considering to build a position on. All right, Palantir's getting really close. I like it here. Done a great job at holding this shelf. Wicked off, perfect thing. Put in a higher low now. We just need to get back above this push maybe around 147 and then we should take off and head back towards the up. The only caveat with Palantir is it does look like an ending diagonal for me. So, in that scenario, you really have 3 outs. Dead cat bounce, 50%. Equality with a slight overshoot, or the trend continues and we get an aggressive play. Those are pretty much the 3 outcomes that you get with an ending diagonal. So that's my thought there. I see no reason why, if you like Palantir, and I like it for a number of reasons here, and its association with software and tech, I think it's positioned well. I'm not exactly sure how they're adopting AI in that, but this name popped up. I believe it was in space, the financial release for SpaceX. And they also listed, and I'm forgetting which one specifically, but it was either AST Space Mobile or Rocket Labs as their main competitor. Should be able to recall that, but I don't right this second. But one of those was listed in that report. So, that is a name that, Palantir, I think, is a name where we're going to head back up towards that 1618. We just need to digest here. Now, if you look at the timeline, November through April, so we've got probably another 2 months before it gets equal to that spread for this flat, sort of that digestion period. However, it takes out what I would consider trend resistant, then that would motivate me to put on a position. Just use the body of that upper candle. I'd even pull it down and say, hey, it takes out this wick. So roughly we get back above about that 144. Then that to me would be chaseable long. We've got my divergence in RSI, right? So we have a confirming low and a divergent low. And the MAC is waning, hasn't quite crossed yet. So it's closer than some of the other names we've looked at. All right, TE. We're running into a little resistance here. I don't think anything that's alarming, but I would think that with the wicks that we've had here, we got a wick here, wick here, wick here, okay? I would think that we get somewhere around 1438, then we get a decent rejection. However, I'm measuring the wave. I'm looking at my fib, and I'm looking as wave 1 or wave 3 does not always. It typically extends. It's like over 75% of the time. It's the longest wave. So there are 2 boxes. The 1618 looked a little extended for me based on wave 1. The 100 fib looked a little shallow, so I went in the middle because I was thinking that looks like equality. And that quite often is how Elliott wave 3s drop. So then we should get some kind of back test. So my thought here is that we end up at about 1528. However, note that we are hitting some resistance as far as my flow index that I have attached in here to the volume. That's this signal that's triggering that. In other words, it's giving me a sell signal here that most likely cases we pull back. Not unusual on a second general, because I would call this general 1, general 2 is expanding. So I think we get at least a shallow general. And with the fact that this is expanded so aggressively, I would not be surprised if we get a longer candle. And that gives us our wave 3. And then we look at getting a pullback at that. All right, looking at MXL. If you own that since $16, you're a great trader. I think we get up to about the 1618 based on the fact of how much FOMO it has. We really are not wicking off to the high side. However, we are clearly wicking. Sellers are getting taken out here. Notice we have those 3 wicks. That is extremely bullish. Now, that said, let me come in and drop in what I would classify as a leg impulse. So I'm measuring, this is 1, let's call this 2. 3 comes in here, so we're substantially more aggressive. I mean, we could hit here and off. So, I mean, it's right around the corner. If this is going to keep running, it'll keep running. I don't know what the FOMO is behind that. I didn't have time to look, but that would be my thought. If it tipped out the wick, notice you have some confluence here on this particular line, right here on this wick. So that little line right there is where we see some confluence. In other words, where we had a top and a bottom, came back, tested, had it. The wick just reconfirms that. So unless it takes out that line right there at roughly $79, $79.30, it's done nothing wrong. It's just hold if you're in it. I would not add a position there. The only time I would add a position on that kind of a move would be if we got a pullback, maybe to about $59, then I would consider entering. All right, EMPH. Boy, that thing just ran, huh? Now, notice how your generals are not cascading, but they're becoming smaller in the leg. Quite often you get price rejection. So I would think that we have a rejection coming here, maybe right at the center of this box here, where that red line is. So roughly about $74. A shallow retest would be about 62, which it could do if it's going to be euphoric. If you look at the history of the pump, it likes those 3 candles, but they've been inverted more than like this. So that's more indicative of a dead cat bounce, which these candles are more indicative of an impulse. Same here. All right. So I would think that we get a little bit of a pullback, at least to the 62 number. So I'm assuming you're holding it. RSI is confirming. So you got at least one more high coming. So I don't know that I would trim or do anything right here. To hold, see what it does. Decide whether you're going to risk, $65 or you're going to risk these wicks over here at $68. That would be the way that I look at it. All right. Coeur Mining doesn't look done to me. I mean, the ABC could be done. I mean, it could. Right. However, it looks more like an impulse down, which and the most likely points is 1430. However, we take out these wick at $20, then it probably has a shot right back to the upside, and then this entire ending diagonal is done. However, it more likely retraces and tests this wick here at that 1261. Might not get all the way down there, might not break below there, but based on the way this chart looks and how broadening that number is, it just looks to me, and this is an industry that's chemically dependent, and we have absolute disruption of that and have for 2 months regarding the Straits of Hormuz. So that means the supply metrics of the chemicals they use to mine and separate the chemicals is now 2 months late, 2 months behind us as far as production. And that has not fully washed into the market yet. So just keep that in mind as far as adding. Just it gets above this 1920, then, hey, I'd have some conviction in trying it long. If not, I'd wait and see if I get a little better price. That would be my 2 cents. And of course, as we know, I'm not always right, but that's my 2 cents. All right, so I think the same scenario here with Ingenico Eagles. Same scenario. I think equality's back around 157. Okay, let's jump over to space for a second. I'm going to run through some names. I've flagged some that I like. All right, now this is a, what is this? This is sort of a 50% back candidate. It's more defense. However, it will realize the defense factor in space is going to be a significant component to funding, because as we build out bigger power stations, there are going to be more resources that go to space. So this is a great spot holding the shelf. It really doesn't get bullish for me till it gets back above this line, but I wanted to point it out, as far as what I see and where I think it's going to go, because I think it's a, good spot back above that 222s. Right now we're down around 179. So, cash secured puts are a good shot here, I think. Sell somewhere around 155s, maybe below that low. That would be my thought. IRDM is already running. Now, this is a communication piece. Again, this is something that should be running with space, and obviously it is running. Nice thing about this way this looks is how it's impulsive. As far as I throw the fibs up on this, the 1618 is up to $82. So, looking at the wave structure on this is wave 1, 2, and I'm just doing this to be quick. So most likely 3 is going to extend probably at least to 73. We're just going to call it that and say, hey, that 82 is totally viable based on the count, based on the history of the tape. So even though we've got these 2 peaking drive over here, realize Elliott wave doesn't favor time. So equality, as far as that's concerned, is up around $89. So let's look at VSAT. Now this is already run. It is overshooting. I would think that we pull back. However, this is a huge benefactor to power in space, and we are confirming. So in my book, this is not done. So the 2618 is the logical extension, which is a huge move. I mean, it could just go to this 104, but the most logical extension based on the way the count looks, way RSI looks, way MACD is open. $120 is totally viable on this leg. And then we see a shallow back test, and then we really see how much this is going to build with space, because this is a name that I really like the way that. All right. Now, Statalogic has already run, given it back a little bit. Peaking drive 1, peaking drive 2, peaking drive 3. So what I would be looking for here is a little bit of a corrective leg. So shallow would be back to about 960, which is right where we are. As long as we don't take out this 836, we should be good. But equality, this would be the optimum entry for me right here in this box down here. So that would be my bias as far as, a great spot to take that long. So, however, the structure's broken for me if it breaks below that 733. Now, I thought it was funny when I looked at Spira Global, it actually finally freaking broken out. I haven't looked at this in forever, except for when I was looking at here with this, let me get my fib tool. So it's honoring the 618. So 1618 is definitely viable here. Kind of have a shallow impulse, and I'm just going to do this to be quick. So I would think we only get back up to about $30. Then we get a reject, get an ABC, and that would probably be similar in price to where we are as far as an entry. Maybe something like that would be like a perfect entry. So back around $23, which is, pennies from where we are. But I would think that this has a decent shot. The scenario here is that this is a 50% back candidate off of this entire leg. So I mean, it literally, get my mark up here. All right, so $79 is viable on this here. So it's potentially a 2x trade from here. I like the idea of selling some cash secured puts on this one as well. All right, Palantir or Planet Labs, excuse me, and forgive me, I'm going to switch. I must have laid out my charts because now I've gone through too many. 1 week. Yeah, I've had to create a specific version of TradingView for my sandbox because it can't recognize multiple. I have multiple templates. It can't see it. So that's what I'm flipping. I'm in between that migration, so to speak. So I think that, Planet Labs has some decent upside. I think this is something that gets chased with space. We got a little divergence here. I look at this as the confirming high, so I still see this, but we have a trend extension. So we have peaking drive 1, peaking drive 2, peaking drive 3. We should get a peaking drive 4, and a peaking drive 5 just happens to be up there where we start hitting terminal instability around 93.23. I think it's totally viable for more upside. So if anyone has a piece on that, hold it, but I would not add a position there. I just thought it would be a good name to go through. And looking at Big Sky, hey, unless it breaks confirming trend support, it's a hold. I don't remember exactly when I flagged this one, but I would come in and go right to the base of this body right here. I'm going to put a little flag up there for you as far as your confirming trend support level. So roughly 40.16 would be your second marker, and then I just use my low at 381. All right, let's look at AST Space Mobile. It's running. Now realize I've got it measured up here to 429 from where we are. Now notice we're $128. So the measured move here to me is 2 to 3x from here. We are breaking out. It's got the FOMO. Any pullback to 106, it's viable. This is going to be a major benefactor, and especially, and it was AST Space Mobile, by the way, that was highlighted in SpaceX financial report. Now I'm recalling that. And this is going to be something that runs, because I'm sure I'm not the only one that's seen that in their report as their major competitor. In other words, they were discussing the potential disruption from competitors, and this is the stock they named. So a lot of people are going to see that. All right, let's look at Momentous. Nice base here. Nice gap and go. We take out this, I mean, it's way the heck up here, but we take out this 43. Now, I couldn't even put a fib on this simply because we have, look at how far back this divergence goes back, I mean, way the heck back. However, this thing literally could take off and we're back at $500 in no time. All it needs is the catalyst, and clearly we have the catalyst here. We're confirming. Okay, so, peaking drive 1, if this is peaking drive 2, I would think it extends right to, this would be a better spot at 41. We're talking a $19 stock. Now, I did not look at, I was just looking at this morning. I have not looked at options yet, but it did hit my options list. So I'll be looking at that later on this afternoon or in the morning and see whether we want to add something there. All right, Cydia Space, another name I like to look at. We're already breaking out here. We really haven't confirmed back to the upside until we break above this specific number at 765. Again, prices below where institutions will jump on board here, but realize $10 is not far away. $10 is like right here. Just, a smidge up there. Institutions will jump in this and they'll carry it. Now, this is shallow. This is a very conservative look, even though the fibs are crazy here. The fibs are just crazy. We're looking at the 17.944 up here at $87. It's totally viable. It recovers here. First hurdle is this 835. Next hurdle is going to be this 1873, right? And it's going to hit some resistance around 26. Once it gets above that 26, it's a launching pad. This actually, out of all of the space names, I like it the most here just because of the structure. You got this squeeze structure. Look at this RSI structure. That is a launching pad, literal. You don't see that in every single name. So that's another one I have not looked at options yet, and I will. And I'll get back to you when, where, and how I decide to add that. Okay, RDW, Redwire. Of course, this is already run. I'm measuring this up to the 2618, 6964. Any pullback to this 1453, it's viable. Realize we got a little more than 2 weeks until the 12th. So, I keep hoping we get a better pullback to add some names, and it just keep it. All right, we're not getting it. We're not getting it. I heard a rumor that Russia had shot down some Israel drone. And, and this is going to sound horrible, but I was like, man, maybe that gives us some news to get me my pullback. And I went to go verify it. It didn't happen. That's just horrible, isn't it? Oh, my goodness. So, I think it heads back towards about $69. All right, looking at Lunar, this is going to take out these highs here around 140. Now, again, we're looking at a $39 stock here. Any pullback to this ledge around 31, I think it's viable to add. I like cash secured puts on that. It's confirming on RSI. MACD is wide open. So this structure, the way that I see this, is we have a continuing trend, but peaking drive 1, peaking drive 2, peaking drive 3 probably comes in somewhere around $80. So it has a lot of upside before it takes that out, and it's already heading into that wick. And once it gets back above that, it's not going to slow down. So, ultimately it's going to depend on how much of a sympathy play we get in names, like Intuitive Machine. All right, now space. Now, I would like this to be doing better, but it still hit my radar because it was bullish, and we just wicked above the prior lower high. As far as your trend support from there, help if I have the right tool up. So we just poked our head above, body right to the wick above there. This holds, so any pullback to 335 in my book is viable. Now the names that I'm going to go over Rocket Labs, and then I'm going to point out the sort of an allocation kind of thing. I would focus on the big names as far as allocations and chase some of the smaller names with obviously a smaller position size. Because I do think this is probably the biggest trading week, the 12th, that we've had in the history of the U.S. stock. It's just everything is coming together for that kind of a week. Now, to be extremely disappointed if it goes in the other direction, because we're going to get clobbered. So, again, I'm going to come back and say, watch position size. But Rocket Lab, to me, looks like it doesn't slow down until it gets around 341. I realize we're at $147. So, at this point, it's still just ride the trend as much as you can. I don't even have an interest in adding this except for cash secured put. If we get a decent pullback, maybe I think it pushes up to at least, we get a pullback to 100, 107. I don't think it gives it to us here the way it looks. That's just my 2 cents. So hopefully I covered everything for anyone. Anyone have any more questions? Okay, well, going once, going twice. We're going to call it a day then, folks. Great trading until next time. You're welcome, guys, gals. Have a wonderful afternoon.